Okay, so this is the exact same window which we will be having in the exam, and now we will be focusing on solving the mock. So it's 3:15 to be precise. So let's also note the time, that how much time we will take to solve this, and I will try to write all the answers, and let's see whether we are able to get it done in 3 hours. Okay, so we have this tab, and in this tab what we are having is we are having this the exhibits, right? So exhibit 1, 2, 3, 4 and exhibit 5. So exhibit 5 is your main requirement to work to be carried out, and requirements, and then word processor. So the first thing I'll do is I will copy the requirements from the work to be carried out tab. So from this part going forward to this, I'll copy it, Control C, I'll go to this, Control V, paste. Okay, so now I have to spend like 1 or 2 minutes. Okay, so this, you can drag it and expand this. So where is part B? Here is part B. So I'll just press enter. Then B is also having 2 parts. Oh, and yes, you missed this part B2. Actually, I checked your mock on the my ACCA website, but it was not there also. So probably you missed it. So here is part D, and then part A. So now you know. So now you know that what is the result when you are in a panic mode. So please don't get panic in exam. Okay. So here we are done. We have copied the requirement. So now we don't need this tab anymore. I'm just going to close this. So we'll be reading the requirements from this page, right? Okay. So if we go to the requirement A says that Fiscus Limited corporation tax liability for 30th June 23. So we have to calculate the corporation tax liability for the year ended 30th June 2023. Exhibit 1 is relevant here because it is mentioned in the question. Okay, moving on. It goes on saying that please prepare a revised corporation tax computation for Fiscus. So we have to prepare the revised computation, right? Then it says that showing the taxable total profits and the corporation tax liability, make brief notes. So we are not required just to calculate the corporation tax liability, but we also have to prepare some brief notes, right? And justifying the corrections you have made to any errors. When Fiscus Limited set up its trading operation in Cosmia, we are advised not to make an election in respect of its trade. So we are not required to make any election in case of operations initially made losses. As the operation is profitable, briefly explain whether Fiscus should now make an election or not. So first we are not allowed to make an election. But further goes on going forward, it says that we also have to make an election if it is needed. So we have to explain the application as well. So that's 6 marks part. Then the part B1. Here it says that you have to deal with the sale of shares, supporting calculation and tax implication of the potential sale, considering both the sale of LOA, that's LOA Limited, so that's from aloe vera. So LOA Limited shares or the sale of trade and assets. So basically that's a comparison of selling the business via selling of trade or via selling of shares. So if we are selling the shares and we are having them for more than 1 year, and if we are having shares of more than 10%, so we can get the SSE exemption, remember? The substantial shareholding exemption. So we might have to write something about that as well. Then part C is employee benefit proposal by comparing the total annual tax cost to the group providing the fuel and those of providing the medical insurance. Calculate the total saving for the group of charging the benefit. You should ignore the VAT for this requirement. Okay, so we are not required to do the VAT thing. Okay, so when I was reviewing your answer, you actually forgot to calculate the fuel benefit. You calculated the class 1A NIC, that was correct, but it should have been calculated on the fuel benefit and you forgot to calculate that. Okay, I guess I also sent you your answers which you have wrote. Okay. NIC class 1A is on the benefits. So first you have to calculate the benefit. Okay, moving on. On part D, right? Part D says that loss relief. So that's something related to loss. Calculate. So that's a calculation. With brief explanation, the tax saving for each of the different ways in which Matthew can use the loss from his new business. So if it's a new business, so that's opening your loss relief. I guess you wrote it correctly. Do not discuss the carrying of the loss forward. Okay. Recommend the best option for the losses. Okay, so we also have to recommend the best. Okay, then part E, HMRC refund. The issues arising and the action that we should take as a result of Matthew's plan for the HMRC payments. That's 5 marks is pretty easy. So what I will do, that was actually related to the ethics part. The first topic which we discussed, I guess, right? So we are in this question, it was something that HMRC has given a refund which in fact should not be made. So if the refund has been made, what we have to do? We have to return it to HMRC and we have to also disclose that refund has been made to us in error. And if the client does not agree, then we should stop working. Then we should stop working for the client. So that was what should have been written. So if I would have been in exam instead of you, I will go with part E first because that's easy 5 marks. I can easily get 3 out of them. So it is related to Matthew. So I'll go with the Matthew exhibit. So let's read out the Matthew part. Given all the changes in the last tax year, here is the various information you have been asking for. So employment, etc. So that's a refund part. That's a refund part. So I just have to read this. HMRC have issued me a refund of 12,000. I have no idea why I have received this, and I can only assume that it must be something to do with my previous employment. As it is their mistake, I do not plan to query it. So he is not planning to give it back to HMRC or not even inquiring it from HMRC that why that refund has been made to us. So let's write something about it. Okay, so I will write that we should, the tax advisors, we should investigate the previous year's tax workings of, the name is Mateo, M-A-T-E-O, and determine that whether there is something which might make him eligible to get a refund, right? So this is the first thing which we have to do. And if nothing comes up, then we should advise Matthew, T-E-O, I guess, to disclose this refund to HMRC, right? If Matthew refuses to make a disclosure, we should stop working for him and notify HMRC that we are no longer working for Matthew without giving the reason why. Further, we should also consider Matthew's involvement in money laundering and this should also be investigated. Sorry. You remember what was money laundering? Money laundering was hiding the proceeds of crime. So that is basically if he's not willing to disclose, he might have to use this amount to make something black from white. Okay, so I am done with this part. So I'm pretty much satisfied that I'm done with 5 marks, and out of this 5 I can get a easy 3 mark. Okay. Now the other parts I'll be doing them later, but first I'll be going towards requirement number 8. Now I will be hitting the question from the start. So let's go to the fiscus note, the exhibit. So this is related to part A, right? So here for part A, it continues going on saying that our company are making good profits. They are all UK resident company, trading companies. They are separately registered for VAT and make wholly standard rated supplies. Fiscus Limited and Alloy Limited are both 100% subsidiaries of a holding of Fern Limited. So that's a group owned by Fern. So Fern, Fiscus and Alloy. So these are 3 companies, right? Corporation tax for the year ended 30 June 23. Fiscus Limited trades in the UK and has trading operations in the overseas country of Cosmia. Fiscus Limited also owns investment properties in the overseas country of Woodlea. So investment property in overseas country, and Fiscus is also an overseas company. Here is a draft corporation tax computation based on the estimated figures for the year ended 30th June 2023. It has been prepared by the financial controller. Okay, so just keep in mind that normally if the computation has been made by the client, that is going to be incorrect, or it might be having some errors. So UK trading income, that's 15,000. Rental income received from Woodlea, so that's net of the tax, so we have to cross it up by multiplying it with 100 and dividing it by 87, right? Then Cosmia's trading income, and again it is net, so we'll multiply it with 100 and divide it by 75. So chargeable gain, we have a note for it, less qualifying charitable donations, 25,000, then taxable total profits, then corporation tax liability. Okay, you attempted this part well, but there was just one error, that you forgot to deduct the QCD from the overseas company from the overseas company's profit before calculating the DTR. Okay, so note, the chargeable gain arose on the disposal of the building to Alloy Limited in February 23 for £370,000. The market value of the building was £400,000 in February 2023. Fiscus Limited had not bought the building for £365,000. Had bought the building for £365,000 in January 21. So the stated figures do not include stamp duty, land tax. So you also forgot stamp duties. There was no option to tax, and no VAT was chargeable on the transaction. Okay. So that's it. We have to use this format, this extract to calculate the tax. So if we come back to the answer part, if you go to the requirement again, it says that Fiscus corporation tax liability, prepare revised corporation tax computation, right? and we also have to make some brief notes. Okay, so let's make the notes here that the trading income from Ficus Limited should be included in the corporation tax computation gross, and also the overseas investment income should be included gross as well. The overseas income will be taxed in the UK, and then double taxation relief will be given, which is lower of the UK tax and the overseas tax. The revised corporation tax liability is in the spreadsheet. Right, so let's go to the spreadsheet part and let's solve this. Alright, so now we have to use the spreadsheet. So this is part A, right? So I might have to, reduce the size of my spreadsheet. So this is how I will do it. Okay, because I also want to use this note sideways, so I will also be reducing the size of this as well. So I guess now I can see both the incomes. Yes. So that's revised corporation tax computation for the year ended 30th June 2023, right? So now I'm going to write I have to put the pound sign, so I'll be copying it from here. Control C, double click Control V. Alright. So first I'll be writing UK trading income. Okay, and that was £15,000. Then I will be writing the rental income, but that would be 20880 times 100 divided by 87, so that would be £24,000. Then we are having trading income from Cosmia, so that's going to be 75,000 times 100 by 75, so that's £100,000. Okay, so about the gains. What about the gains? Are the gains chargeable? No, because there will be a, I guess, rollover relief. Gains were gains were how much? 5,000. So what we have to do with the gains? What was your treatment for that? No, there were no gains. Why? Because the chargeable gain arose on the disposal of building to Alloy Limited. Alloy is a group company, right? So it's a part of 75% group. So I will go back and I will enter this part in my word processing as well. So where it was okay. So the chargeable gains are not taxable because it will be part of my briefing notes. The chargeable gains are not taxable because it was the sale to a 75% group company, right? And as per the group, as per the capital gains group, it is at nil gain, nil loss. Okay, so that's a 0. You have to write 0. Done. So gains are 0. After gains, what are we having? That's it. These were all the incomes, right? So after this, I will be totaling all the incomes. I will make a sum, and now this is your total profits. Now from this I will be deducting qualifying charitable donation, that was 25,000, right? And if you deduct it, that will be your taxable total profit. You have to calculate the corporation tax. That's will be this into 0.19. So that is 21660. Now from this 21660, you have to deduct the DTR. So we have to make the calculation for DTR, right? Let's make working number 1. Double taxation relief. So we have 2 double taxation reliefs. One on the rental income. Exactly. So rental income, if I write the UK tax, how much would it be? The rental income was 24,000, right? So 24,000 times 19%, and if I see the overseas tax, that's this times 0.13, 13%. So that was 3120. Agreed? Right. Okay. And what's the DTR on the trading income? So let's copy this. That's trading income, and I will be copying this. Okay, so this 100,000 times 0.19, so UK tax is 19,000, and if we go to the overseas tax, that's 25%. Right, so I have to choose the lower of, right? Is there any other information? No. Have we read the start part? The information which is given on the front page? Let's also read that so we don't miss something. You are an ACCA student working for the firm of accountants. Your manager wants to prepare a report for the client. The firm, in addition to what you are asked, to prepare meeting notes with a separate client. Met you and the correction. This done. This is a separate part, right? Yeah, I can see one thing. Because the qualifying charitable donations was having an adjustment. couple of other modes, employment benefit proposals. Okay, so this part second is something to do about the permanent establishment. So we also have to write something about that as well. Okay, let me just. Okay, so fiscus. Let's do it and discuss later what is. Okay, so the lower of would be this, and here lower of would be this. So let's make a total. That is your double taxation relief, and you deduct it from here. So I'll be using the full word. So that's more than the corporation tax liability actually, right? So the relief actually can't, exceed the tax. So this 21660 would be your double taxation relief. So if you deduct it, there you go. This is your revised corporation tax liability, or actually you can write it payable. So actually we are not required to pay anything. Done? Is it clear, Samantha? Alright. So this is part A. We are done explaining this, but the only thing left is the permanent establishment part. So it was, asking us to make an election for permanent establishment. So do we have to make an election for permanent establishment exemption? No, because the trading profits of fiscus are in the country of Cosmia are exempt in UK. So we are technically not paying any taxes, right? So we have to write something about permanent establishment. So what we will be writing? So let's write the election for permanent establishment in relation to the trading income and from the country of Cosmia is not required because the tax rate in Cosmia is 25%, which is higher than UK. So all the UK tax will be nil due to the availability of double taxation relief. I copied that from the Excel sheet, right? So that's it. So this was a 6 marks part, right? So after this I will be, deleting all this. There you go. So that's my requirement. I'm just gonna copy, bold, and underline this, so the examiner knows that I have made a briefing notes as well. So the revised corporation tax liability in this spreadsheet done. So moving on, part B. It is requiring us to deal with the sale of Alloy's business. So aloe vera is aloe, so that's aloe, not alloy. Okay, so sale of the business. So we have to deal with exhibit 2. So we have to explain with supporting calculations. So you might have to do calculations as well, considering both. So that's B1, right? And that's B2. So I have to delete all of this. Okay, but let's first read it out. Remember that we are advising Fern Limited Group and not the purchaser. So we are advising the group, and do not consider the implication that that only affects UCA PLC. Assume that the tax rates are applying in all the previous years. Recommend which sale would be greater. Will give the greater net tax proceeds. So we have to also calculate the net tax proceeds. Okay, of the LO Limited. So after applying taxes, we have to see that which of the method is giving us more benefits. Okay, so let's go to the exhibit 2. So this is just a 2 minutes activity, to separate it out. So I'm done with this exhibit. I don't need it anymore, so I'm going to close it. I'm going to this exhibit 2. Okay, so Samantha, I would like to read it out. So the market value is going to be 700,000 pounds, right? And what we have to do, we might have to deduct the 640,000 pounds, right? And this company is what? LO Limited. So LO Limited also purchased a building from the other group company, remember, in the first part. So exactly, so it might have to pay the degrouping charge, because degrouping charge is paid if you leave the group within the 6 years containing still having the asset. Remember? Okay, so we bought it on when? Fern bought the share capital of LO on when? 1st February 23, and when it is going to sell it? It wants to sell it on 1st August 23. So this means that the SSE, this substantial shareholding exemption, will not be available, right? So we have to write that. So where we can write it. I'll do the calculations later, but first I'll be writing this. The chargeable gain will rise on the sale of LO Limited shares because this is the sale of shares outside the capital gains group. Number 1, the substantial shareholding exemption will not be available on this sale because the shareholding was not held for 12 months in the last 6 years, right? Also, there will be a degrouping charge which will arise on LO Limited because this is leaving the group, because it's the company, so we'll be writing this. So because this is leaving the company, leaving the group, leaving the gains group rather, within 6 years of getting an asset from another company from the same group. Right? The calculations are in the spreadsheet. So let's now go to the spreadsheet and make some calculations. This is part B1. Here we have the spreadsheet. So B1. B1. First we have to copy the pound sign. Sale of LO Limited shares. So how much are the disposal proceeds? These are 700,000. And what we have to do next? We have to add the degrouping charge in this. So we have to calculate that. So we will be doing that here in working number 2. After this, we have to deduct the cost, and the cost was 640,000, right? There you go. We'll be having it calculated. Rather, charge. So how the degrouping charge will be calculated? Gifted, right? So let's go to the first part. So the market value was 400,000 and the cost was 65,000, right? So the market value at disposal was, market, we have to click here. Okay, so market value at disposal, that was 400,000. Then you deduct the cost, that was 365,000. After this, you also have to deduct the SDLT. What is SDLT? Stamp duty land tax. So you have to calculate it. Working number 3. Okay, so how much was the value of the land? That was 365,000, right? So if we calculate the SDLT, how much it will be? Up to 150,000, from it was 0, from 150,000 to 250,000 it was 2%, and above 250,000 that was 5%. So is equal to brackets and another bracket. So that's 250,000 minus 150,000, brackets close, times 0.02, brackets close, plus another bracket. So that's going to be 365,000 minus 250,000, brackets close, times 0.05. So stamp duty land tax is 7750. You also have to deduct this from here as well. So now you have the gain, and the degrouping charge was equal to the gain which would have been realized. So I'm just writing a degrouping charge. Exactly. No, it will be added to the proceeds or added to the gain, because that it has to be payable, right? So the gain is 87250. Agreed? Any confusion in this? And also the stamp duty land tax. And there are some marks for this. Okay? Is it clear now, Samantha? Any confusions in this part? Sure? And are there any VAT applications? No. No. Actually, there are no VAT applications because VAT is not applicable on the sale of the shares. Okay, number one. But we also have to calculate the after tax proceeds. So if we calculate the after tax proceeds, what we will do? So first we will be writing the disposal proceeds. That is the 700,000 pounds. Right? I'll be linking this figure. Okay. Now after I have to deduct the corporation tax from this, and the corporation tax on this gain would be what? 19%. So when you deduct this, so there you go, you have your after tax proceeds. Because we have to calculate the after tax proceeds of both, because we have to identify that which of the disposal is giving us the maximum after tax proceeds. Is it clear, Samantha? Any confusions? Sure? You will. Just if you know the rules, you will. Okay, now the sale of trade and assets. So this is B2. Okay, so let's move on to the part this and read it again. Yes, mainly this part and note from manager. So please. So what we have to do now? You have to tell me something. First of all, we are having a profit in relation to goodwill. We have to see each assets one by one. So the asset, if we talk about goodwill, the market value is 270, cost is 0, so the whole 270 would be a gain, right? Agreed. Then if we talk about the building was having a value of 420,000, and if you deduct the cost, that is 372,000 pounds. 370,000, right? But you also have to add the stamp duty, land tax. But the original cost was 365 because that was a group company, so nil gain, nil loss transfer. Remember? So you will deduct the original cost and the stamp duty, land tax. So you will get the gain on the building as well. And then we have plant and machinery. So what about plant and machinery? We are disposing it for how much? 50,000 pounds. And the original cost given here is how much? 80,000 pounds. But if we go to the last line, it says that I can confirm that the tax return value of the plant and machinery is nil. So technically we don't have it in our assets. So that's 0 and 50,000. So that's a clear balancing charge, and balancing charge will increase your corporation tax liability because it increases your profits, right? So let me tell you how to do this. First of all, we have to see goodwill. So let's paste a pound sign here. Okay, Samantha, don't use control, okay? Because if you use control, it will go to the end line, right? And again, if you will use control, it will go to the top line. In Excel, it is different. It goes to the last word which we have written, or the last amount. So if you go to the goodwill, the market value was how much? For 20,000? And 270. Yes. Cost is 0. So this is the capital gain. Actually, I'll write it rather trading profit. Okay. After goodwill, we are having built-in. So again, the same thing. The market value is how much? 420,000, as we have seen it. Cost would be equal to minus brackets. Actually, is equal to, and let's go upstairs. So this plus this. So that's the cost. You deduct it. That's your capital gain. Then plant and machinery. So the market value was 50,000. No, we are not supposed to write the cost. We will write the TWDV, the tax return on value. That's 0. So this is a profit. And then this profit will be having a balancing charge. $50,000, but it will be added here. Okay. So if we calculate the total income in this regard, so this is your total income. Okay, so we will be applying corporation tax here. That's this, and if we calculate the after tax proceeds, how much is it going to be? We have to write the disposal proceeds, and disposal proceeds are what? No. This is the proceeds if we sell the assets one by one. So that's 740,000 pounds. Okay. So 740,000 from the question. You deduct the corporation tax from it. Is equal to minus. There you go. And then you make a sum. There it is. So this is the after tax proceeds. So after tax proceeds are 670,222, and in the first part it was 683. So selling the company through the selling of shares would be beneficial, right? So let's move to that part, the word processing, and let's add some things as well. Okay, so VAT is not applicable on the sale of shares. Right? The after tax proceeds are found So let's see it from the spreadsheet. Let's also copy the pound sign. That is 683423. 683423. So please don't forget to put the comma, right? Okay. So let's write something in this part as well. If Fern Limited or Fern PLC sells the Hello Limited by selling the assets and trade, it will have to cease its accounting period, and then each asset will be treated individually. The sale of goodwill will have a trading profit of pound, like we will write the amount. The sale of building will give rise to a capital gain of again pound, and we'll write the amount. The stamp duty land tax will be payable by the purchaser. The sale of plant and machinery will give rise to a balancing charge of pound, whatever, and this will increase the total profits of the company. Okay, we just forgot to mention one thing here. The sale of Hello Limited by selling shares will not reduce the number of 51% related group companies for the purpose of dividing the threshold for the tax payment for the year ended 30th June 2023. But I will copy this and I will paste it here, and here I write that the sale of law by selling trade and assets will reduce the number of 51% group company for the purpose of corporation tax payment. So that's it. So we just have to write, okay, the last thing which we definitely have to write, the after tax proceeds of selling the assets and trade is, so I have to copy this pound sign again, and we just have to write this amount. So let's go to spreadsheet. Okay, so here we have the spreadsheet. So the gain on the goodwill was how much? It was to 70,000 pounds. Then the capital gain on the sale of the building was how much? It is 4720, 47250. Then the balancing charge was 50,000, right? Okay, so the after tax proceeds are how much? 270,223. Sorry, 670,223. Okay, so I'll be writing one last line. Selling LO Limited by selling the shares will give extra after tax proceeds of pound. How much? Extra after tax proceeds, so that would be, we have to go all the way up, this minus this, so that's 13,200. So let's write it down. 13,200. The calculations are in the spreadsheet for reference. Okay. So how many marks are we done with? Plus 5. Plus 5. So we are done with 24 marks. And it's not a full 1 hour. So, and we technically have 1 hour 30 minutes for this question, right? So we can write, we can solve other parts as well. Okay, so employee benefit proposal by comparing the total annual cost of the group providing the private fuel and those providing the medical insurance. Okay. Calculate the total savings for the group. So we have to make the calculation for the group of changing the benefit, yes. Just a second. You should ignore VAT. Okay. As if I knew that VAT will be applied. So I'll be deleting all this. So just employee benefit proposal. So that's my new heading. That's my part C. So let's go to the next exhibit and let's kill all others. Okay, please go ahead. So the first is the company car, right? Let's write something about it. If the company car is provided, then there will be a taxable benefit for employee as the car will be used for private purposes. Or you can also write private journeys as well. And the company has to pay the corporation tax. No, the company has to pay Class 1A national insurance contribution on the taxable benefit at 15.05%, along with the cost which will be incurred for the car. So the total of NIC and car cost will be allowed expense for the company and will create tax saving of, like, we have to write the amount as well. Okay, so the calculations are in the spreadsheet for reference. Okay, so let's go to the Excel and let's calculate it. So here we are. So this is part C. So that's company car first. So we have to calculate the car benefit. So the list price of the car was 25,000, right? And the CO2 emission is 140, so 142. So we'll consider it 140. So let's multiply the car benefit. If I calculate working number 3 for CO2 emission percentage, so that would be up till 55 grams. It would be how much? It would be 16. Above that, it will be 140 minus 55 divided by 5, right? So we'll copy paste this. I'll double click on this one and put equals to sign. So that's 17. So 16 plus 17 would be 33%. So car benefit would be how much? It would be 25,000 times this 33 divided by 100. Agreed? Yes, I told you that you forgot to calculate the the car benefit. Okay? So actually car benefit calculation is in the working. So I'll rather give the name of car benefit. So copy all this to here. Sorry, cut, Control X, Control V, and I'll bring the car benefit here. So this working is all. So car benefit. So I will calculate class 1A NIC. Just a second, I'm getting a call. Just a second. Okay, can you hear me? Okay. So the car benefit would be how much? The NIC car benefit. So sorry, go again. Actually, we were not supposed to calculate this. I just remembered that we were to calculate the fuel benefit. So that's 25,300 times this percentage. So the fuel benefit for one employee is this 8394, and there are 100 employees. So is equal to brackets this times 100 and times 15.05%. So that would be the NSE class 1. Okay. And the cost of fuel which the company has to pay is how much? 120,000 pounds. So the total expense for the company is how much? 245. And if we calculate the corporation tax saving, so that would be at the rate of 19%. So that's going to be 466 something, right? So if we calculate the total cost of providing the fuel, that would be how much? This minus this. Okay? Are we clear? Then this was fuel provided to employees. The other part was what? Insurance. So if we provide insurance, how much would that cost? Cost of insurance would be 1200 times 100, so that's 120,000 pounds. And then we also have to calculate the class 1A NIC, right? And the cost paid by the employer is the benefit to employee, so that would be this amount times 15.05%, right? And if you add them together, that's your total expense. So let's copy paste this. Okay, so tax saving by providing what? Insurance. That would be this minus this, right? So let's write something in the word processing. If the company car fuel is provided, then there will be a taxable benefit for employees, as the car will be used for private purposes and the company has to pay class 1 insurance contribution. Will it create tax saving of how much? So the tax saving was, we have to see it from the spreadsheet. Let's first copy the pound sign. So there is the pound sign. Let's also put it here. Control V, and Control V. So the cost of providing the fuel was making a tax saving of 198,979, right? The total, no, this is the total. It's a tax saving if you provide the fuel to employees. So I'll be writing the other amount as well, so I don't have to use the spreadsheet again. So that was 87,150, right? And then copy paste, and the total saving is, so sorry, 87 total 150 was the total saving, and the other tax was 111,829, right? Okay, so I will copy paste this. Copy paste. So this will save my time. If the company provides car fuel, and if the company provides, actually pays for the medical insurance, then there will be a taxable benefit for the employee as it is paid to insurance company which is not run by the company, and the company has to pay class 1 insurance contribution, taxable benefit, this, okay, and along with the cost of the cost incurred for the insurance, right? So the total NAC would be, corporation tax saving will be this. The total annual saving will be this amount. Will be this amount if the company provides employees with medical insurance instead of fuel for private journeys. Agreed? So this was part C. Now we are left with part D, right? Agreed? So let's highlight this point. Okay, so we have to write something about the loss, and that's a 9 marks part. So let's say if I don't do this, I am still passing this question. So we have to write, and also we have to recommend the best option, right? So the heading would only be loss relief. So I have to kill this one. So it was related to Matthew, right? So I started trading as an unincorporated business on 1st July 22. I made a loss of 58,000 for the period ended 31st March 23. So there is no need to prepare the basis of assessment because the year is already aligned with the tax year. However, I should make the profits in the future years. So that's a sole trader business. Given all the changes in the last year, here is various information you have been asking for. Cessation of employment. On 30 June 22, I stopped working for FIC PLC and sold my 15,000 shares in FIC PLC in the same date. Okay. So new business, I started new business and made a loss. So there's a loss in the first year, right? So the income, employment income of Matthew is where? Okay, here it is. For further information from manager, we have been advised we have advised Matthew for several years. Matthew is UK resident and UK domiciled and was an employee and the shareholder of FIC PLC from 1st July 19. Okay, Matthew earned £102,000 per annum during his employment for FIC PLC. FIC PLC paid dividends of £1 per share in each year. So he was having how much shares? Okay, we have here. So Matthew received no other income. Matthew made a charitable gain of 30,000 on the disposal of his 15,000 shares. A shareholding of less than 1%. He made no other disposals during the 2023. So the dividend would be 15,000, right? And the loss can also be adjusted against this chargeable gain as well. So what was your answer? So as Matthew is having loss in its first year of trade, the special opening year loss relief can be used to relieve the loss, according to which loss can be carried back against the total income of previous 3 years on LIFO basis. Oh, sorry, that is FIFO basis. Cap on income tax, cap on loss relief will also apply, which will restrict the loss which can be adjusted against the total income. Cap is higher off, so I have to copy the pound sign now. Higher off, pound 50,000 and 25% of total income. Okay, so let's now make the spreadsheet. This is part B, loss relief. Okay, so what was the first year? The first tax year is 22-23, right? So the loss of 22-23 is how much? 58,000, right? So let's first write the incomes in all years. So the years were 1920, 2021, 21-22 and 22-23. Right? So we had employment income, one 2,000 in each year. So let's copy paste up till this year. Control C, select, Control V. But in the last year, it stopped working when? On 30th June. So in this tax year, he worked for April, May and June, 3 months. So this one is equal to, is equal to this into 3 by 12. So that's 28,000 pounds. Okay. Apart from this, he is having dividend income of how much? Is equal to 15,000 into 1. Control C, select, Control V. Oops. So I accidentally clicked Control R. That's the command, for. Okay, so hopefully it is. Thank God it is here. Yes. Because if it would have been gone, then I would not have solved anything else. Okay, so let's make a sum. That's 127,000. Control C and Control V. So this is your total income. Okay, so if we apply the opening year loss relief, then the loss would have first been adjusted against the total income of 1920, right? So if we make a total, the maximum of 50,000 would have been adjusted there, right? But it is also, he's also having a gain in this tax year 22-23 of 30,000 pounds. Yes, please. No, we can adjust the loss of 28,000 in the current year and then the remaining 30,000 against the capital gain. So this is also an option. If you use this relief, then there won't be having any need to pay the income tax of current year, and also not to the capital gains tax payment. Agreed. So let's see. If we have to make some loss memorandum. So working number 1, loss memorandum. So let's copy the pound sign. So I said that loss is from tax year 22-23, and that is 58,000. If we apply the opening year loss relief, that would be 50,000, and this would have been against the tax year 19-20, because the gap is restricted us. Then the remaining loss, and on this again we have to apply this opening year loss relief for 2021, and then remaining 8,000 we just okay. Moving on, working number 2. No, how many workings we have made so far? Let's see. Working number 1, 2, 3. It was actually working number 4. Okay, now this is actually working number 5, and then working number 6. Again a loss memorandum. Again we have to write this, and we will be adjusted against the total income of 21-22, which is higher, so we'll be adjusting 50,000 there. And then remaining 8,000 is left, and then we can adjust it against the total income of current year. To 23, that would be 8,000, and there you go, the remaining will be 0. You have to use the mouse. Okay, then again a loss memorandum. Copy, paste, and loss is the same. Now I'll be using 22-23, and here I'll be adjusting it against the total 28,000, so 30,000 remaining, that can be adjusted against the capital gains. And this. So we have to see that what is the most beneficial out of all of these. So if we adjust the loss against the total income of the tax year 22-23, then what will be the resulting effect? The personal loss will be wasted, right? And we will be saving tax at how much percent? 20%, because the total income is less than the 37,700 limit, right? So we have to make the use of loss in a year where the income is maximum, where the relief is maximum, right? So if we adjust in the current year, the tax saving would be 20%. And if we adjusted in the previous year was being taxed at, total income was being taxed at how much? 40%, because he was a higher rate taxpayer. right? Agreed, Samantha? Are you getting it? Right. So technically, what we'll be doing is the best relief is to adjust it against the previous year total income. Okay. Okay. Now we allocated 1 hour 30 minutes for this question, and we are only left with 4 minutes. So in the 4 minutes, I will be just writing few words, and then we can move forward. So we have written something. Okay. Loss can also be adjusted against the total income of previous 12 months. First, because the income in the previous year was pound. So let's copy this pound sign. Was 127,000 pounds, and if the loss is adjusted in that year, relief would be at 40%. Okay. Control C, Control V. Loss can be adjusted in total income of the current year, and then against the capital gains of current year, which arose from the disposal of shares in FIC Limited or FIC PLC, and if loss is registered in, I will replace that with current year. It would current year relief would be at 20%. The best option to relieve the loss is against the total income of 21-22 first, and then against the total income of current year. So I'm just left with 1 more minute, so I will be writing the calculations are in the spreadsheet for reference. Okay, so we spent the full time, right? Now let's go to the answer of this question. I guess I have saved it in my desktop, so let me share it with you as well. So we can see that what were the issues. Desktop. Just a second. Okay, here we are. Okay, so this is the corporation tax computation, and the DTR is this. Okay. Okay, so we deducted the 25,000 from the total because we made the total, but it was 15,000 UK and 10,000 overseas. I guess this was not clearly mentioned in the question. So the rest is the corporation tax liability, which we calculated is also 0, and paid it is also 0. Okay. Okay, so here it is written. To maximize DTR, the qualifying charitable contributions are deducted first against the UK income and then against the overseas income. So UK income was only 15,000. So first we have to deduct it here from here there, and then we have to deduct it from here. So the resulting TTP of the overseas income was 14,000, and if we multiply it with 19%, and it would have given us this amount. Okay. Okay. Exactly, and this permanent establishment, and we wrote it as well. Therefore, there is no need to make the election exemption. Okay, done. And the corporation tax on the sale of shares, gain is this, degrouping charge is correct, STLT is correct. So tutorial notes are there, you can read them, and will no longer be related, but it will still be included for the group companies. So yes, we wrote it as well. Stamp duty, land tax, we didn't discuss this. Okay, we discussed this. VAT implications, after tax proceeds, trading profit 270,000 in respect of goodwill, gain of 47,250 on the building. Okay, each item will be sold at a loss, no capital gain or rise. Okay, capital market value is 50,000 deducted from the TWDV, and a balancing charge of 50,000. This will be added to the LO's trading income. Okay. So the seized or cessation of trade, we wrote it as well. VAT, we forgot to mention VAT. So that was a transfer for going concern, should have been mentioned. Okay. So it was 13 marks. So let's say we are down with 3 marks, but we are still having 10 marks. So after tax proceeds are here. So recommendation, the sale of share is recommended at the net tax proceeds are slightly greater from the sale of trade, as we are also calculated this, and this is also correct. Okay. So benefit proposal, annual cost of providing the fuel. So this was the cost of fuel, this is the benefit calculation. You know, the fuel benefit times the percentage time 100 and this. So this was the cost of providing the fuel, less the savings, right? And then the cost of providing the medical insurance, and that's the cost of insurance, the benefit, and the savings. So annual savings will be this if we are providing employees with the medical insurance. Then the next part. So this is the loss. So 84. This. Yes. Okay. So please read this part. Rather, I will read. The maximum loss deduction against the journal income in 22-23 is greater of 50,000 and 25% of net income. That is 50,000. The remaining loss after such a claim can be used against the gain in 22-23. Using the loss against income would save income tax of this amount. So we deducted 20% allowance from this amount, and then it is saving an extra of 3 zeros, and we didn't calculate that. The personal loss cannot be preserved, so it uses this uses the 28,000 loss. The remaining 30,000 loss could be set against the capital gains. So the reduction would be 10%, but after the reduction of this, okay. But the wasting annual exemption, total saving. Okay. So this is the total saving from part 1. So if we adjusted the loss in 21-22, it would have been at the rate of 40%, right? So 50,000 plus this and 40%. So this is the 2500, as this restores the personal loss. The remaining 8,000 loss can be used and save tax at the rate of 20%. So in the next year. Alternative, it is saving us that it is the net saving is at 40%. So loss relief against the total income. As the loss has been generated in the 1 year, it can be carried back for the 3 years on 5-year basis and set against the internal income. The loss of 22-23 could be carried back to 21-19-20. The loss reduction is again limited to 50,000 pounds. Just give me a minute. I mean, she brought something. Okay. So actually, I'm telling you to send me something as well after that result. Okay, so the taxable income before the loss was this, and after the loss relief is this. So there will be a saving as well. So you can see this calculation, and the savings would be 24,424. So the highest saving we are getting is in the tax year 21-22 relief first. So that's 26628. So here it is giving us the recommendation that the best relief given by a carryback to 21-22 would be the remaining loss used 22-23. This gives us slightly more than the early year claim. And lastly, if we talk about the errors, we should investigate tax affairs in order to determine whether or not there is a valid reason for a refund. If we are unable to identify the reason, the receipt of 12,000 must be disclosed to HMRC as rapidly as possible. Matthew can inform HMRC himself, or he may authorize us to do so if we skip this point. However, we must not disclose the error to HMRC unless we have this permission. We cannot continue to act for Matthew unless the disclosure is made. So, if Matthew refuses to notify HMRC and repay the money, then we must cease acting for him and should advise HMRC that we are not longer acting for him, but without giving any reason. Non-disclosure of the error would also amount to tax evasion. This could result in criminal proceedings under both the tax and the money laundering regulations. Agreed? So, this was the full 50 marks question, and we supposedly completed it in the given time. The aim is to complete every part, right? So just try to write answers for every part in a sequential order. Like we started with the part E first because this was a theoretical and we knew that at the end we might not get time to write, but in the first we can write something and we can easily get 3 out of the 5 marks. So if we score the answer which we wrote the answer for almost, let's say, 40 marks. I'm not counting the last 9 marks because we were really bad at that part. So let's say if we wrote for 40 and we are able to get 30, that's fine. We are passing that question. Okay. Is it clear now? Okay. So let's now move to the next part. Okay, Samantha, I won't be solving the next questions. I will rather be discussing the questions. Okay. So let's close all of it and move to the next one. Okay, so that's the indication, and okay. Yes, here we are. So this is a requirement. So requirement A, calculate. Requirement B, advise. Requirement C, explain. B1, explain. Requirement B2, calculate. Requirement C is B3 is rather calculate. So if we total the marks of calculation, that would be out of 20, that would be 6, 7, 7 and 5. So 12 marks are for calculation. So that's pretty easy one. So requirement A1 is calculate with brief supporting explanation the inheritance tax payable on Liam's death. Advise EV of the actions she should take to increase her inheritance by increasing the charitable donation, and calculate the increase in the amount that she would receive. Okay, so you forgot one thing, that if we are giving more than 10% of our estate to a charity, the rate of inheritance tax reduces. It reduces to 36%. You skipped that point. Actually, you scored just 3 marks in this question. This question was really, a bad attempted question. Other parts were okay. Like if you the last, if I talk about the last question, you scored, I guess, 13 marks in the last question. So scoring 13 out of 25 is good. Like if I guess you got panic in this question, right? I can see it from your answers. Okay, so let's read the question requirements and then we can go to the scenario and then we can discuss the answer. Okay, please, A1. This was the only part which you in which you scored the marks. Yes, and you remembered it. Okay, moving on. In this part, you didn't understand the requirements. So it is sorry, you didn't understood the scenario. Okay, to calculate the income from the investment in shares, you should assume that IV invest in the total of 200,000 in each case. So the full investment has been made, right? Let's move to the scenario. So this is a very little scenario. Getting, I guess, 15 marks is not hard, but if you are reading this question in a calm mode, but if you are in a panic, that's where the disaster begins. So please, Liam. Okay, I got one question for you. Do we subtract the annual exemption from the death estate? Yes, you deducted the annual exemption from the death estate, and I when saw that answer, I just held my head that I didn't knew that where I should hit my head. Annual exemption is only deducted from the lifetime gifts. It is not deducted from the death estate. So if you deduct that, that's a conceptual mistake. An examiner won't leave you. Just keep one thing in mind. Don't do any conceptual mistake, because examiner won't pass you. Because this is your last exam. After this, you will be in the market working as a tax consultant, as a tax advisor. And if you are conceptually weak, he won't pass you. Okay, so how much is the state? That's 870,000, and it is including the residence. So, and the value, everything is 50,000 is left to charity, and the remainder is to IVs. And IV is, I guess, the daughter. So there would be a residential limited band of £175,000 as well. Agreed? And you forgot that as well. Okay, moving on. Allah. So this means that the remaining nil band or the remaining residential nil band of her mother cannot be used on the death of her father, right? Because they were not married. Moving on. Okay, so let's put a break here. Let's discuss the first part. So we are done with the reading, and we can write the answer for requirement A1, A2 and B1. Okay, so let me jump on to the answers. Just a second. Okay, can you see it on the screen? So that's the calculation. So death estate was 870. You deduct the charitable donation, that was 50,000 because that's exempt. You deduct the residential nil band and the nil band because Ivy's father didn't made any lifetime gift, so the full amount is available. So the charitable estate is 320,000. You multiply it with 40%, and that's your inheritance tax, and then you deduct the QSR, the quick succession relief. because his father received an asset in the 5 years before his death. That's the calculation of the quick succession relief. A reduction in IST payable on Liam's death within less than 5 years of Ella's death, because Ella transferred her estate to Liam. Net assets on Ella's death, that were £500,000 minus 70,000, that's £430,000. So QSR is 70,000, and how that is calculated? 430 minus 500. So 430 is the amount which is being given to Liam. Let me go back to the scenario. Yeah, this is the amount. Okay, so it is, as it was 3 to 4 years, so 40%. So this is the amount of the value, the quick succession relief. Okay, are you clear? No, yeah, taper relief is on the lifetime gift, and quick succession relief is on the death estate, and it applies when you died and you got an asset in the previous 5 years, and you paid inheritance tax on that, right? Exactly. Okay, so the inheritance tax rate applied was 36%. Why is that so? Because the chargeable estate was how much? 320,000, as you can see here. You plus the charitable exemption 50,000. You plus the residential unit band, that's 175,000. So that's 545,000. And you are making a charity donation of £50,000. So that's 54,500. Yes. So if we move to the part B, let's see what it says. A deed of variation to Liam could be made by Evie within 2 years of Liam's death in writing, for no consideration and containing a statement that the variation has to have to effect for IST purposes. The gift to charity should be increased to 54,500 to benefit from the reduced rate of IST, as we did it in the note 1. So IST saving would be how much? It would be 14,420. So it was calculated by taking 1,03920 and 89,500. Agreed. At the moment, the tax is at the rate of 40%, but it can reduce to 36%. And if it is reduced to 36%, how much will be saving? The saving will be 14,420. But an extra 4,500 is given to charity. The net increase in the inheritance to Ivy would be 14,420 minus 4,500. That's 9,920. Are you clear on this? Exactly. The savings minus the amount which is not getting. So that's the net saving. So that's the net increase in the inheritance. And here we have the revised calculation of the IST. Okay, the furnished holiday letting part. So the property satisfies the condition for it to be treated as furnished holiday letting accommodation if it is based in UK, available for letting for 210 days a year. So it is it was available for rental for 280 days. You wrote 281, so that's fine. However, to qualify, the property must also be let furnished on a commercial basis, actually let for 105 days, excluding days which are classed as long-term occupation, that is 31 days to the same person. You actually wrote 30 days. Actually, it is a continuous period of 31 days. Okay. So this is B1 as well. Are we clear so far? So, yes. So in requirement B2, it says that calculate the income tax relief available to EVs in the first year of investment, assuming that she invests £200,000 in shares in Cardi PLC. This is just 1 mark, so it would be very easy, but it relates to VCT. Okay, so here we have the Cardi investment. So VCT investment, subscription price of 25 per share, annual dividend of £1 per share. So she is considering to investing £200,000. So £200,000 divided by 25. That would give us the number of shares she is getting in the VCT, right? And on the number of shares, she will be getting a dividend of £1 per share. And what was the relief in the VCT? There was a 30% relief, income tax relief. Remember? You forgot to write about that. So income tax reduces available of 200,000 and 30%, that is 60,000. However, this is limited to the income tax liability for the year, which is only 44,460. And how it will be calculated? 37,700 times 20% plus 92,300 times 40%, and that is 44,460. So this is just 1 mark calculation. Yes. Okay. Moving on, the part B3. So here it said that calculate EV's potential annual after tax income from each of the 3 investments: the residential property, the investment in Jumper, and in shares in Cardi PLC in subsequent years. To calculate the income from investment, you should assume that the total has been invested. Okay. So if we invest in the residential investment property, it is located in the tourist. Have we read the other part? Yes. So EV is a UK resident and domiciled, has trading income of £130 per annum. So this was the amount on which the income tax liability was calculated. Currently has no other income, including the assets inherited from her father. Will invest £200,000 cash from her father's estate. Will invest in either the residential property, shares in Jumper, or shares in Cardi. Okay. So residential property is located in a tourist destination in England. Can be let on a weekly basis, would be used for maybe about 12 weeks for the year. So 7 multiplied by 12, that's 84 days, right? And if you deduct 84 from 365, that will give you 281 days. Okay. Expected rental income of 10,000. Allowable cleaning and maintenance cost of 1,300. So this means that the income would be £8,700. On this £8,700, the tax rate would be how much? 40%. Because she is also having a trading income of £130,000. So this will be an income in addition to that 130. So the tax rate on this would be at the rate of 40% because she is a higher rate taxpayer at the moment. Okay. So if she invests in the Jumper PLC, quoted trading company, not a venture capitalist trust, current share price of 20 pounds per share. So she will be getting 10,000 shares and annual dividend of £1 per share. So she will be getting a dividend of 10,000, and out of that 10,000, only 8,000 will be liable to tax and will be at the rate of 33.75%. Okay. And if we talk about the VCT, what will be the implication? Let's see. So if we get the residential income, that's 8,700 and it would be at the rate of 40%. So after tax income would be 5,520. Agreed? Are you clear about the residential property? Okay, so number of shares in Jumper PLC. So the shares purchased will be divided by 20 is what? Oh, but we also have to pay the stamp duty tax on the purchase of the shares, which is equal to the 0.5% of the value. So 200,000 times 0.5%. Okay, so we will be getting 9950 shares. Okay, and if we calculate the dividend, that's 9950, and out of this 9950 will be taxed at 33.75%. So that's 7334. So let's say you forgot to mention the stamp duty. That will just be reducing 1 mark from your calculation. The other way marks will be there. Okay. So the after tax dividend income will be what? You will be getting a dividend of 9950, and if you deduct the tax, your after tax income will be 7334. Is it clear? Exactly. So if we talk about the Cardi PLC, it goes on saying that Cardi PLC VCT investment, no stamp duty on the newly subscribed shares, no tax on VCT dividends, number of shares purchased. So the shares will be 8,000 and dividend per annum will be 8,000 into 1. So dividend, and this dividend is your after tax income because there is no tax on the dividends received from the VCT. Okay. So as of now, things which you need to revise on an urgent basis is the share schemes and the employee investment schemes and inheritance tax, minor areas. Are we clear? Yes, please. Is there any confusion, Samantha? Yes, exactly. You actually deducted the personal allowance from the property income which we received, and you said that there is no tax. So you have to keep your mind working. So this was the reason which due to which I said that you have to solve section B first. Section B questions are straightforward but can involve some complexities just like this question. Okay, so if we are done with this question, let's say we have 1.5 hour and we can easily solve these in 1.5 hour, and then we can spend the rest 1.5 hour on the first question, right? So let's now go to the last question, and then we'll be discussing the plan for the next how many days? Thursday, Friday, Saturday, Sunday, and Monday. So next 5 days. Okay, so this was the question which you attempted well, and yes, and it was really good attempted by you, and you scored 13 out of the 25, so that's okay at the moment. So here it says that you should assume that today's date is 1st of June 2023. The directors at your client Hosta Limited wants advice on the share buyback transaction involving a building and the extraction of profit from the company. So this was a purchase of the shares by a company, right? The purchase by a company of its own shares rather. So the following exhibit available on the left hand side of the screen provides information relevant to the question. So Hostel Limited and the requirements. So let's first go to the requirements. Please go to the requirement. So part A was very well attempted. There was just one little issue with the business asset disposal relief part. Rest was okay. So I actually gave you 5 marks in this part. Moving on. Okay. So part B, if we talk about part B, you also attempted this okay. This was not good, but it was just okay because you forgot to mention the partial exemption and the capital goods scheme. Okay. Moving on with regards to part C, I guess you misread the data from the question, because the information given in the question said that the loan and the dividend was after the tax. So that was the net amount. So we had to gross it up to calculate the tax implications. So there is where you messed up. You explained that well. You explained every part of this question well. Just you did with the wrong. You explained them with the wrong amounts. So for the explanation, I gave you 5 marks, but sorry, actually 4 marks. But with regards to, but I have to deduct 6 marks just because you did with the wrong amounts. Okay. So let's move to the scenario. What Hosta is all about. Okay. So let's see. you forgot this net of the tax liability. Okay, so let's say if you're getting a dividend, that would be after the deduction of tax, that's 39.35%, right? And if you got a bonus, that's after the deduction of income tax and NIC, right? And if you get a loan part was correctly attempted, but you messed up with the dividend and the bonus amounts, not the concept. So let me take you to the answer. Just give me a second and I'll be back with the question. Okay, here we are. Can you see the screen? Okay, so part A. Moving on, please. So this was actually well written by you. So if you move forward, you just messed with the, applying the tax on the gain. So the gain of 400,000, it should have been taxed at the rate of 10%. But you actually applied the tax on this remaining limit. So this is where you messed up. Okay, so let's see what it says. Okay, so let's talk about the VAT applications. So you didn't mention this point. Okay, moving on. So you mentioned this, but you forgot these two paragraphs. Moving on, part C. So extraction from the company. So if we took out the dividend, shareholder suffered 39.35% income tax. So dividend would be how much? 10,000? No, it would be 16,488. So the cost to the company of providing the dividend would be 16,488. Right? The shareholder suffers 45% income tax. And why is that so? Because how much was the tax? His income was, all shareholders were directors and with the income of salaries of 200,000. So all were, additional taxpayer and all were having dividend of 30,000. So it was 2,000 related brand was also have been used. You also mentioned about that as well. So the tax on the dividend on the bonus would be 45%, right? And there would also have been a 3.25% NIC class 1, right? Class 1 employee that would have been suffered by the employee. So total it is 48.25%. So if it is 48.25%, how we have to net it? We have to multiply this 10,000 with 100 and divide it by 100 minus this 48.25. So the net amount would have been, the gross amount would have been 19,324. So this, right, 19,324, and if you calculate the NIC, So this is the total cost of the company, and it would have created corporation tax saving at the rate of 19%. So the actual cost of the company would be 18,008, right? Because we have to calculate the cost of the company. Na? Agreed? But you said that the cost would be in your answer. What you written that the cost would be 10,000 and 10,000 would be same. Actually, it is not the same. Okay. So if we compare these two parts, the dividend would have been less expensive for the company. Let's move to the loan. So you written exactly what was to be written, the closed company thing, and actually I gave you full marks in this part. So let's see what was the treatment, please. So that's the full allowable reduction for the company. So I guess the loan option would have been the most beneficial for the company, right? Okay, so the tutorial note, the level of salaries of the shareholder director is 200,000 such that they are additional taxpayer and suffer 3.25% employee class 1 and additional source contribution on additional earnings. Due to the dividends already received, there would be no dividend back. So as this was the thing I told you. The taxation of dividend and bonuses is not a new knowledge at ATX, but questioning involved extraction of profit is often tested this knowledge in an ATX style. This is particularly the case here where you must work backwards from the amount each shareholder or director is to receive after paying their own taxes, and this is what you missed. Several different taxes, income taxes, national insurance, corporation taxes are involved. So in this one question, there were income taxes, there were national insurance, and there was corporation tax. Try to work systematically through each extraction proposal, clearly labeling your answer. So again, the examiner is also requiring you to work slowly. Okay. The definition and application of a closed company are technical ATX topics. You may be asked specifically about whether a company is closed or the tax implication in a scenario involving a closed company. In this question, you are not told that this was a closed company, but the small number of shareholders and the loan to shareholders would remind you to consider this. Agreed? Yeah. So that's the end of the story. So basically, what you have to keep in mind is that you have to score 50. You are not required to score 100. You are not required to score 80. You just need 50 marks. So keep your brain calm during exam, because if you will keep it calm, things will get in your mind. But if you get panic, that is the time when you will start to fail your paper. And please don't get panic during the exam. Everything is here. Whether you pass or not, you will remain Samantha, right? Right? You will still work in PwC. Your family will still be your family. So don't get worried about it. It is just an exam. Just try to enjoy the exam. The moment you start enjoying your exam, that's when you pass. Rather, that is the time when you start scoring. Okay, so try to enjoy the exam. So let's discuss the, let's say, plan for the next 5 days, right? So just give me a second. Okay, so here I have my pen. Okay, so today is 30th. So we have today's time 30, 31st, 1, 2, 3 and 4. Okay, so from tomorrow, one past paper in morning and one in evening. So that's 2 past paper, means 6 questions a day. Okay, you have to identify the questions from the exam kit related to the 1 past paper, and then you have to solve them. Okay, so that's a daily ongoing activity till 3rd. Okay, today recap notes and your weak areas from book. So if we talk about the 2 past papers, that's a 6 hours activity, like 6 hours 30 minutes. The rest of the time should be spent on revision. Okay, so let's say you try to spend another 6 hours on revising the course content. So the breakdown for that 6 hour would be 1 hour reading the notes, and I guess now you will be able to read the notes from start to end in 1 hour. Is that the case or not? So you have to skim it on a daily basis. So let's say you skim it till the exam for 5 times. The rest 5 hours, now that's the book. But if you talk about book, it got 2 things: theory and calculations. For theory you have to skim it. But if we talk about the calculation, spend time understanding. Okay, so this is the plan which you should follow. And if we talk about 4th, that's Monday, the day before the exam. What you have to do in this day is you have to read the remaining questions from exam kit. The once you are done, that's good, but those are left, try to read them from the kit. Agreed? So technically this is now the life-saving plan which you have to try to follow. Okay, so if we go to the if we talk about the past papers, till exam you can solve 8 more past papers, and when you will be done solving the 8 past papers, then you will be in a really good condition, because you are revising things on a daily basis. You are trying to understand the calculations on a daily basis, and then you can reading the book on a daily basis can help you pass. And most importantly, don't panic in exam and preparation, because the moment you will start getting panic, you will start forgetting the things, and if you start forgetting things, you might end up not writing a simple answer which you can, like you just did it in the mock exam. Because before the mock exam, I told you that you were doing really good. I checked several of your questions, and you were scoring more than 50% marks. But the reason why you didn't score in this particular mock is just because you got panicked. If you wouldn't had panicked, you just needed 16 more marks to pass, and that would have been done. And actually you got 34 marks from 87, because you had not attempted the last the part B of the first question. So if we calculate the percentage, how much it would be? Calculator. Okay, so calculator would be helpful to make this calculation easy for us. So that would be 34 divided by 87. So that's actually 39% marks. So maybe if you attempted that 13 marks part, maybe you were able to get 10 more parts, and if you were not panic, you were able to get some more marks from the second question. So actually, if you had attempted the full mock in a calm situation, you would have easily passed this mock. Right? Okay, so I am moving to the book, and I will be telling you one or two more things. So I am just going to remove this because it is all above my screen. Okay, can you see the book? You have to go at the start of the book, rather exam kit. You have to go at the start of your exam kit, and there is a surprise for you. Yes, on page 42. What are we having on page number 42 will help you a lot, especially with self-assessment part. So on page number 42, you are having time limits and election dates. Okay, for agree to the amount of carry the loss forward, that's 4 years, and this is the date for 2023. So it's a summary which you can use to revise all these dates, and you have to read this summary because it is a summary of everything, because as you can see, there is income tax, then there is national insurance contribution, then there is capital gains tax, every relief including the EIS one, right? Then individual self-assessment, the tax dates of the tax return filing, the payment on account, balancing payment, everything, right? So this, I guess, 5-pager from 42 to page number 46. So this is a 5-pager. So 42, 43, 44, 44, 45, 46. So this 5-pager is a life-saving drug for the one who is going to attempt the exam. Okay, so you have to, number one, you have to read the notes on a daily basis, and number two, you have to read this 5-pager on a daily basis. Okay, because this will help you to get from 49 to 50. Okay, so is there anything you are having confusion with, or is it just you need time to recap everything? Okay, so let's have another mock then. That would be on 2nd. So today is 30th. So you have 30th, 1st, 30th, 31st and 1st. So you have 3 days to prepare for it. Okay, so sorry, yes, Saturday. So I will be sending you the mock on Friday night, and then you can solve it and send it back to me on Saturday afternoon, and then I will be sharing the solution and will be sharing your marks in that. Okay, and that would be Saturday would be 3 days before exam. So in case if there is another issue in that mock, we can still have some time to fix that issue. Because just keep in mind that we just need 50. That's it. Okay? So please turn on your jets, go fly high and get it done. Okay? So see you then on Saturday. Agreed? And stay aggressive, stay motivated. That's all you can do at the moment. Just keep in mind that there is no outcome or there is no benefit in getting the panic at the moment or even in the exam. Getting panic will get you to 49, but you have to work it back to 50 or 51. That's it. 50 is okay, not even 51. Yes, not 49, 50 is okay, right? So boost up your preparation and just ask whatever is giving you trouble. I am available on WhatsApp. Alright? So, see you on Saturday then. Stay safe. Goodbye.